Good afternoon, ladies and gentlemen. Welcome to the CleanTech Lithium PLC investor presentation. Throughout this recorded presentation, attendees will be in listen-only mode. Questions are encouraged. They can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your questions at any time and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll, and if you give that your kind attention, I'm sure the company would be most grateful. I'd now like to hand over to Daniel Fox-Davies. Good afternoon, sir.
Mark, good evening, and thank you. Good evening, everybody. Thank you very much for joining again for what is now our third bi-weekly CleanTech Lithium update. We're joined this evening by the company's Executive Chairman, Dr. Steve Kesler. So just stepping back, the principle on these was to focus on different key points that are strategic to the company's development over the next 2 years to help engage with shareholders to give them a better understanding of what the company will be up to over the next 6, 12, and 18 months. A month ago, we focused on the drilling update and how we were doing on the ground. 2 weeks ago, we had a bit of a review of the political situation and how the application of the CLs was going to work. And what we wanted to do this evening was to help give a bit more of a 101 to exactly what is direct lithium extraction, what are the advantages of direct lithium extraction over traditional brine extraction. We'll talk a little bit about the differences between brines and hard rocks. And Steve may or may not mention it, but Steve's actually, his PhD is in hydrometallurgy, so he's expertly placed to be able to help explain this and give a highlight to investors of how the whole process will work. So before we do that, one of the other things we wanted to do is we wanted to introduce our latest non-executive director, Tommy McKeith, to shareholders. Given the time zone difference, it was going to be 2 a.m. in Perth. So in the best of English BBC tradition, we made a little video earlier, which in a second Mark will play out. So we'll go through that first as an introduction to Tommy, and then I'll be handing with Steve to go through the DLE, and then we'll be answering questions at the end. We've received actually some 30 to 40 questions. A lot of them actually say the same thing and overlap. So what we've done is we've grouped them into four different topic areas, and we'll go through them at the end. But in the meantime, please, if anyone has any further questions, do please submit them via the question application that you have here. So with that, Mark, if we could please run the video from earlier, that'd be much appreciated. So good evening and welcome to another of CleanTech's bi-weekly investor updates. As we say at the beginning, the intention was to focus on different aspects of the company and the process between going from being an explorer to being a producer to help educate shareholders in both what's happening on the ground and also what to expect over the coming 6 and 12 months. In one of our previous presentations, we introduced investors and shareholders to one of our non-exec board directors, Maha. As part of the process of listing onto the ASX, it was a requirement of the company to have a resident Australian director. And you would have seen an RNS several months ago that we were delighted that Tommy was able to join the company as a non-executive based in Australia. And we thought it would be useful for shareholders to get a chance to have Tommy talk about himself, his background, why he joined the company. Tommy also was part of the entire management team that went down recently to site to go and look at the operations and the building of the pilot plant. And with that, I'm delighted, in the best traditions of the BBC, this is one we made earlier, but given the time zones, Tommy, very good to see you, as always. What I was hoping you might be able to get across today is a little bit about yourself, your background in mining, the other public companies, and what attracted you to CleanTech as a company and its assets, and why you were willing to come and kindly put your name alongside the rest of our distinguished board in helping the company meet its goals.
Well, thanks, Daniel. It's really good to be talking to you today. Well, I'm a geologist. I've got well over 30 years of experience. I've run exploration groups that have been involved in several major discoveries across the globe, as well as run project construction groups. So I feel I'm well qualified to, assist CleanTech in moving forward from being an explorer through into the development of this project. I've done it before many times. And interestingly, one of the major discoveries I was involved with is one called Solaris Norte, which is quite close to our Laguna Verde project. So for me, that was one of the attractions, to go back up the mountain and go and see an area that I know quite well. So that was exciting. So what interested me in CleanTech was, I guess, my initial discussions with the board, specifically Steve, and understanding the depth and the passion of the company, the depth of experience and the passion in the board level to build a project and to build a company that's with a sustainable background. So basically doing everything in a genuine way to supply products to this, movement or sort of change in the environment that we're seeing, where we're moving away from fossil fuel dependence to a cleaner and better environment. So that's why I was excited to be part of this team.
And as I understand, you were recently down to Chile looking at the operations on the ground. What did you sort of learn out of that trip?
Well, I learned a lot, and I think I'll probably summarize it into 4 sort of main areas. What I was really what was hit home to me was our assets, our main assets, Laguna Verde and the Francisco Basin. We control 100% of the brine within that basin. That's different to other brine producers that jointly own a brine field. And, I think that can become kind of complicated in the future when more than one company is extracting from the brine field. We have 100%. So that was particularly exciting to me when I saw that. Secondly, the DLE market is developing fast. And there is a number of different initiatives moving very rapidly towards production. You have to be able to take advantage of all of those different opportunities that as the R&D is happening. And I think what I saw in Chile with CleanTech was a fantastic ability to be able to do the test work we required. We've built ourselves a facility in Copiapó where we can do bench scale testing in a carousel, in a carousel format, which means that we can do continuous testing of the resins and the flowing of the brine through the resins. We've built a significant pilot plant. The pilot plant is I would say semi-industrial. It is a big and well-built pilot plant that is currently it's being constructed and it will be commissioned in due course. And this gives us the ability to test new resins that keep on coming to market and optimize those resins to our particular brine field. And again, our brine field is 100% controlled, so we can sample the whole brine field and we can know exactly what material we're going to be putting through our plant. So we have a great opportunity to take that and optimize it through our facilities. On top of that, we've got a research unit in Antofagasta that, together with the university there, which is a great initiative, and then also access to a number of third-party testing facilities in Santiago. And we visited all of these. And I was just so impressed at the amount of progress that we are as CleanTech making, but also the industry is making with the advances on DLE. So that was the other really exciting surprise for me. The third thing was our engagement with the community. We have fantastic relationships with our local indigenous communities and any other stakeholders in the area. And again, that comes out of Aldo Boitano, our MD, who's genuinely looking to build a sustainable business in Chile. And to do that, you need all your stakeholders to to benefit and to be supportive of this. And clearly, what we saw with the signing of our first community agreements was that we are at the forefront of that in Chile specifically. And then I guess the fourth thing that I came away with, feeling both confident and excited, was our team. We've got a team that's under Steve firstly, and then Aldo in country, who have got the depth of technical expertise, the depth of community engagement expertise, the depth of environmental management expertise, and financial expertise that I'm very comfortable that we have got the pieces in place to build, to take this project, as you said in your introduction, from exploration to development in a timeliest manner.
Excellent. I hope one day actually to get myself down there as well. Actually, it'd be very fascinating to be on the ground. Now, yeah. You obviously. We're delighted to have your expertise on the board, but specifically, Steve, I know I'd reached out because it was a requirement for the ASX listing to have an ASX director. And that is progressing. There were some delays with the ASX and backlog, but we are now hoping that will be concluded in the second quarter of this year. The reason for seeking to go to the ASX was several different reasons, actually, but in part that about 30% of our register is in Australia. And I'd asked in particularly our largest shareholder, Regal, who supported the pre-IPO, the IPO, and then the last two rounds, increasing from 10% initially and then holding their corner, and then increasing to 15% and then holding their corner. And they'd expressed an interest in potentially helping the company in the development financing when that takes place in a year or two. But to do that, they wanted to be on the ASX. But our general perception was that the ASX has a lot more lithium companies, a lot more companies that are looking to use DLE, a lot more companies using brines generally, and they tend to get a higher multiple. Now, I count myself as a shareholder, like most of the audience here, and we've all been a little bit disappointed with the sell-off in the market and the consequent share price performance across the entire peer group. But you and I recently caught up in Cape Town, where I certainly felt there was a bit of a turnaround in sentiment. And I know that talking to several of the Australian brokers, you've just had the big RIU conference down in Australia. And the feedback that I got was there was a large sense that commodities are looking to have bottomed out, and a feeling particularly that lithium has turned a corner in terms of pricing and a bit of an increase in some of the interest and the value. How are you seeing things down in Australia at the moment?
Well, exactly as you've just said. I mean, firstly, the Australian resources market is probably the most dominant market in the world. The amount of research analysts, the amount of stockbroking firms that cover resource companies, and the depth of that coverage, I think, is what makes the market here so strong. The market here is extremely well informed as a result. So the average shareholder understands resources, understands the risk, understands the rewards. There's been a lot of people that made a lot of money in resources here in Australia. So I think that's why it does attract those sort of premiums. Recently, obviously, we've all seen the sell-off in lithium stocks as a result of the lithium price, dropping substantially. It's disappointing, but the whole sector's, risen and fallen with the tide, I'm afraid. But definitely, what we're seeing now is some green shoots. There's been a couple of mine closures and a lot of discussion here in the market about those mine closures and a lot of, as I say, discussion around those signaling the bottom of the market. And I think in the last couple of days there was some rumors of some mine closures in China that sent some of the bigger names here in lithium sort of with 5-10% increases. So I think those are the starts that we want to see for a great recovery. And and I'm optimistic that there will be a sort of strengthening in the price firstly, and then the lithium stocks towards the end of the year and definitely into 2025.
I think actually, I don't want to take up too much of the slides, but Nick from CleanTech kindly put some slides together for us. And I think one of the things that anybody that's been doing resources for a while will be aware of is that when anything increases at the speed at which the lithium price went up over the last sort of 2.5 years, there's always a correction back, and it tends to over zoom up on the one side and then overcorrect to the downside. But it's not sustainable where we are, given the rest of the industry's average cost price. But this is a slide that the company put together. And I think the interesting one here is that the bottom line here in orange is what is CTL's break-even price based on our scoping study. These are some of the various forecasts. And one of the things is that we hope to be in production in the next sort of 2 years or so. And whatever the price is, even at today's price, we throw off a phenomenal amount of cash flow. This will be a very, very profitable business, even if the lithium price is to stay where it is. Now, in the short term, on the exploration companies, the sentiment gets affected by the headline price. But as we move through the PFS and into the DFS, and you start to get some hard and fast numbers, and you start to get some cash flows, and you can start to do some DCF models, then we can really put some concrete numbers around what we think the value is at the project. And I think this is a very worthwhile graph here to take a look at. But Tommy, thank you very much indeed for your time.
Daniel, if I may just say, I mean, one of the things I think that's really critical to think about when we're looking at any resource market, but is the cost curve. And you know what I was saying about sort of the price bumps now that we're seeing in some of the major lithium producers here, around rumors of closures of mines or high cost mines in China, sort of telling us that we're sort of hitting the bottom of the price position, because after that there's not going to be enough supply coming to market. I think that's very important, and that's where I think investors need to focus specifically on brine producers and CTL in specifically in our position on that cost curve. And I think, you know, looking at previous work that the company has put out, our position in the cost curve is very competitive, and I think that's what makes us such an exciting opportunity for investors at these prices.
No, I agree. Now, I'm going to be catching up with you down in Australia in a couple of weeks' time, just for the benefit of our shareholders. Tommy and I will be going around and meeting with a wide range of the analyst community and other brokers to start informing the market and raising the profile of CleanTech. Because irrespective of the overall market movements, and we expect to be recovering from here, on a relative basis, CleanTech is still incredibly cheap in comparison to the rest of its peer groups, looking at both brine and looking to use DLE. We still sit at about sort of a third of the value of where the rest of the peer groups are on the ASX. And we're hoping that by moving to the ASX, we hope to not only expand the universe of investors to hopefully increase liquidity. It also helped. We were hoping for a re-rating, which won't happen immediately, but will happen over time. And then also the benefit of being on the ASX is that when the company does look to do the more significant construction financing in a couple of years' time, large amount of that will be in debt and from an offtake partner, but there's always an equity component to that. And you're talking now about 2026. But by having access to 2 public exchanges, it gives you the broadest possible chance in terms of raising that capital at the most effective and cheapest price. So, Tommy, I'm very much looking forward to spending a week or so on the road with you. And thank you very much indeed for your time. We will probably come back to you in a couple of seminars' time to focus maybe on some of the construction side. But otherwise, I look forward to seeing you very soon, and thanks for your time.
Great. Yeah, thanks for having me on.
Okay. Well, that was Tommy. We did that earlier, so very much thanks to him. So, Steve, now it's our turn to launch in. So what I was hoping we could get out of today was to call upon your expertise to help explain exactly what DLE is, and then we're going to go to some of the questions that have come up around the pilot plant and the processing and how we're going to move forward and what's been happening on the ground. And then I thought at the end we'd just have a little chat about some of the things that you and I have seen in the market, and then I'll talk a little bit about where we are in pricing, because it's always something that comes up as an interest to everybody. But before we launch into that, I just wanted to check. So yeah, your PhD was hydrometallurgy, if I recall.
Yes, yeah, I did my PhD thesis in hydrometallurgy, and then I joined. My first job was with Rio Tinto when we were developing the Rossing uranium mine in Namibia. That was the largest uranium mine in the world, and we used ion exchange technology to recover the uranium from the leach solution. And that was my first job, was doing all the R&D there, and then managing the ion exchange operation, which at that time was the largest ion exchange operation in the world. So joining CleanTech Lithium and coming right in this DLE was right back to the start of my career, which is very exciting.
Excellent. Now, would you like to take control of the screens, or would you like me to move forward?
Yeah, no, I'll take control of that. Let's go to let's go right back to the beginning. Okay, we're going to do market at the end. Okay, let's do DLE. Lithium has been produced by two main methods to date. Now, the first is by the use of evaporation ponds, as you find in the lithium triangle in Chile and Argentina. Here's a picture of what they look like. It's a massive disruption of the surface land. The brine is pumped from the aquifer, is put into these ponds, and there's a period of maybe 15, 18 months using the sun to evaporate the water away, waste the water, and gradually concentrate the lithium, precipitate out a lot of the other impurities, and eventually after about 18 months, the solution is concentrated enough to start the processing to make lithium carbonate. Costs are generally low because you're using the sun for energy, but big land disruption, and all the water from the rare resource, the water resource underground, is wasted. And today in Chile, this has been recognized by the government as not sustainable. In the National Lithium Strategy announced last year, the president declared that no more permits will be given to projects using evaporation ponds. All future projects would have to use direct lithium extraction or equivalent technologies that were sustainable, and where we are the front runner in Chile in that. The second part of production, which has been growing very rapidly on the back of production largely in Australia, is conventional hard rock mining. And these are large open pits, a few underground. It's normal blasting, crushing, use of dense media, separation, flotation to produce a concentrate which is only 5.5% lithium in it. So a very large energy consumption, also surface disruption with the large open pit mines. But what you've got then is just a concentrate. Then it is then put on a boat with 94.5% waste and shipped to China for processing into lithium hydroxide. And that's done by roasting the concentrate at 1100 degrees C, very high energy consumption. Then the lithium has to be dissolved in sulfuric acid, then extracted from that acidic solution, and eventually producing lithium hydroxide. So that whole chain is very much tied into China, very high energy consumption and pretty high cost. And just about all of the production from Australia, and there's increasing production of hard rock coming out of Africa, it is all going to China and feeding into the battery supply chain back into Europe and the United States. And clearly this is where the governments in both those parts are very concerned. And if we look at direct lithium extraction, what it is, this is a generic diagram. Basically, you look at a brine, which is in an aquifer underground. You pump the brine from the aquifer and pass it into columns containing adsorbent. These are little resin beads, small resin beads, which are specifically designed to be selective for lithium. The lithium chloride adsorbs onto the resin beads, and all the other impurities are left behind in that spent brine, which is then re-injected back underground. And the re-injection is important because then you don't have water loss from the aquifer. In this process of adsorption onto the resin, you're looking at recovering 95% or greater of the lithium from the brine, whilst rejecting more than 99% of the impurities like calcium, magnesium, sodium. So this first stage is very much a purification stage. Brines, in our particular case, in CleanTech Lithium, about 200 ppm. You're looking at the concentration of the eluate after this DLE stage, concentrated by about 3 times, but leaving more than 99% of the impurities behind. Now, once the lithium is adsorbed onto the resin, it is then desorbed purely by passing water through the column, and the lithium chloride then desorbs from the resin bead into that water, and that forms the pure lithium chloride solution. So that's the first purification stage. We then concentrate that lithium chloride solution using conventional processes of nanofiltration, reverse osmosis, forward osmosis, until we get a lithium chloride concentration of about 12,000 parts per million. The few impurities that are left are traces of a little bit of calcium, a little bit of magnesium, traces of boron. Those are removed with ion exchange to have a pure lithium chloride solution. We then add soda ash, that's sodium carbonate, and precipitate the lithium as lithium carbonate. This is then dried, packaged, and shipped to off-takers, largely battery producers, cathode producers, for use in the battery production cycle. So that is the DLE. Now, the advantages of this compared to hard rock mining or evaporation is this is very much more efficient. The recovery of lithium from the brine is 80-85%, not the 40-45% of evaporation ponds and the 70-80% of hard rock mining. The surface footprint is very small. Water consumption is very, very low. Energy consumption obviously much lower than the hard rock conversion process. Not as low as evaporation ponds, because they have the benefit of the sun. So clearly there's very good advantages to using DLE. And I've laid those out on this comparative slide. One of the key things, as Tommy hinted at, was operating cost. Generally, the hard rock projects are higher operating costs because they do the conventional mining. Then they have to be converted to lithium carbonate in China. Those projects are largely at the top end of the cost curve. If you look at brines, the evaporation ponds with the benefit of sunshine are right at the bottom end of the cost curve. DLE, depending on the concentration of the brine and the technology used, is also very, very competitive at the bottom end of the cost curve. We're looking at our scoping study, the results. We're looking at an OPEX of about $4,000 a ton which is in the lowest 25% quartile of cost producers. If we look at our particular situation, again, Tommy said what he was really struck by was that we have obtained 100% control of our two major basins at Laguna Verde and Francisco Basin. This is unlike the situation in other areas of Chile, like the Salar de Maricunga, where there are a number of potential projects there, or in projects in Argentina, where there are multiple projects on the same aquifer. And that will result in some operating difficulties. And I'll explain why here. Again, I explained that we pump the brine from the aquifer, pass it through the DLE plant, absorb the lithium, desolve the lithium, produce the lithium carbonate. The brine, after we've taken the lithium out, has no further change apart from minus that little bit of lithium. It is then re-injected back into the aquifer so that there is no water loss. But we don't want to re-inject close to where we are extracting. We want to make sure we do this far enough away so that we do not dilute the brine where we are extracting. And this is where it's important to control the entire basin and design the extraction well field. I think in our scoping study, our well field had about 23 wells to do the extraction, and the re-injection was in about 16 wells. And you need to control the entire basin, so you extract from one part and can re-inject in the periphery of the basin. So you plan the extraction, the re-injection, to maximize the recovery of the lithium resource in that aquifer. And again, clearly we have a very small footprint. When you're up in the mountains, if you go up there, it's a very attractive environment, and we aim to minimize the footprint that we have.
And Steve, correct me if I'm wrong, but as far as I'm aware, CleanTech is the only publicly listed lithium company that has 100% of basins.
Well, we have two. There are a number of companies that have recently gone into Chile. The French company Eramet has acquired a number of salars to the north of us, and the other company, Lithium Chile, is also acquiring areas in the Yamara basin where we have a major land holding too. But the salars which Eramet have are also wholly owned.
Okay, I'll stand correct on that. But at the time we were listed, we're the only one from
Yes.
Yes. All right, I need to keep on that one.
And the only one that has advanced their projects to the
stage that we have.
That we have done. Yeah.
Is Eramet public?
Eramet, yes, they are. Yeah, it's a French multi-commodity company. They produce nickel, manganese. They have a lithium project in Argentina called Centenario, which is in construction, and they expect to be in first lithium production in this coming year. They have their own DLE technology. And they like Chile a lot, which is why they spent $90 million on buying the land area of salars in Chile, and they aim to start doing exploration work in the course of the next year or so.
I think for one of our future ones, I'll have a look at who else has now picked up acreage in and around our assets and within the country as well. I think it'd be interesting for shareholders to know what other interest is picking up, but that's one for a future conference.
Yeah, I think the next salar to us, which is going to see development, is the Salar de Maricunga, and that is an area where Lithium Power International, an Australian company, had an evaporation pond project. They wanted to proceed, obviously, with the National Lithium Strategy. That wasn't going ahead. Codelco had assets there. The Erasmus Group had assets there. SQM have assets there. So there's 4 major companies and some minor companies, all in the Salar de Maracunga. What's happening there is Codelco have acquired the area of Lithium Power International, spent $241 million in buying that. As part of the National Lithium Strategy, the government wants to have government participation in the Salar de Atacama, where SQM is. They've come to an agreement that they will effectively joint venture that project. The government will have a stake, but increase the term of the license beyond the 2030, where SQM has it at the moment up to 2060. And as part of that deal, SQM has ceded their licenses in Salar de Maracunga to Codelco. So Codelco is trying to mop up all the other players in Maracunga. So it's a very active situation there at the moment. But we're absolutely clean. We have 100%. We filed our sales as we told the market or told the investors 2 weeks ago, and progressing on that basis. But I think that this slide is really showing what's been happening in the last few years. Until 6 years ago, the only producer of lithium using DLE was Livent in their Hombre de Muerto project in Argentina, where they've been using DLE for 20 years. Since then, there's been more interest in the potential for DLE, both in the salars in Chile and Argentina, the salar lakes in Tibet, in what is now China, the geothermal potential, which you see in California and Germany, and also in the oil field brines in Arkansas and Canada. So what we've now been seeing is a lot more technological groups and potential producers moving into this area and rapidly developing the technology to more efficiently recover lithium from these brines. This slide is showing the various stage of the technology, whether it's in laboratory, pilot plant, demo plant, or into commercial production, and different types of DLE processes. So the top block on the left with Livent, you'll see Sunresin. We've been working with Sunresin for a number of years. They had their first commercial production in China in 2017, and developed a number of projects since then. You then start to get major engineering companies like Koch have been in this area. Potential production companies, Vulcan Energy have got a geothermal project in Germany. Rio Tinto bought into the Rincon project in Argentina. And all of those projects are using what we are using, which is adsorption. It's the adsorption of lithium chloride onto a resin, generally an alumina based resin. But even amongst all of these, there are other companies that have been very rapidly developing their technology. We announced in an RNS a couple of weeks ago for our pilot plant, which we've bought from Sunresin. It's a Sunresin designed pilot plant. After doing extensive testing on many of these different resins from different suppliers, decided to buy resin for our pilot plant from the Chinese company called Lanshen. It's also a big resin producer, and they have 3 demonstration plants already operational in China. And we took that decision based on the resin proving that it had, for our particular brine, the highest adsorption capacity with efficient elution. And that's important because if you have the highest adsorption capacity, that's the more grams of lithium you can put on a kilo of resin, you'll get a higher elution, an eluate concentration at the end. and you need a smaller plant to produce the same amount of lithium. So high absorption capacity is important. Now, although we are using Lanshan resin in the pilot plant, we still continue to test many of these resins, because the rate of technological advancement will continue over the next few years. And we want to be absolutely on top of the market for what is happening in technology that can potentially better our project when we go into commercial production. Then the second blocks you'll see is ion exchange. And again, many companies are working with ion exchange. The top of that block is Lilac. They have a partnership with Lake Resources in Argentina, where they've sold their technology to Lake Resources in exchange for 20-25% of the project. We haven't wanted to give any of our project away, so we're only buying the technology and the resin, not giving our project away to a technology provider. Now, where ion exchange is different is in the manufacture of the resin. You have H+, an acidic group on the resin, and the lithium exchanges with that H+, which goes into solution, which lowers the pH of the brine, so it chemically affects the brine. And the lithium is quite tightly bound into the structure of the resin. And to remove it, you cannot just use pure water like we are doing. You have to use an acid to then strip the lithium into the eluate. Then you have to deal at recovering the lithium from the acid, and you get into neutralization issues. And because of the sensitivity of the silars, we prefer to use the adsorption method, where there is no change to the brine that we propose to re-inject underground. So that cannot be of an environmental concern. Once you start changing the chemistry of the brine, then there can be potential environmental permitting issues. The third block of potential DLE technologies is solvent extraction. So rather than having a solid resin bead in adsorption and ion exchange, this is a liquid. It's an organic liquid with an extractant within it, which again can selectively extract lithium from the brine. And it is very, very efficient, but there are problems with using solvent extraction. That when you want to separate the brine and the solvent, which are intimately mixed together during the extraction process, it is very difficult to remove all traces of the organic. So that when you re-inject the brine back underground, to ensure that there is no organic contained within that brine is very, very difficult. Again, I go back to my experiences at Rossi. Not only did we have a very large ion exchange plant, we also had a very large solvent extraction plant. And I know how difficult it was to prevent any organic entrainment in the solution. Then you've got the next two blocks are really looking at the downstream process. The first three, adsorption, ion exchange, solvent extraction, are looking at extracting the lithium from brine. And then the downstream conversion of all three of those is pretty conventional. You concentrate the lithium chloride, polish off any final impurities, and precipitate as either carbonate or hydroxide. The two other ones, the electromembrane, electrochemical, once you have the lithium chloride into the eluate, you're using electrochemistry to separate out the lithium hydroxide from the brine rather than using a chemical precipitation. So lots of development this is just in the last 2 or 3 years. And even in the last year, there's been tremendous development, and we expect that to continue in the next few years as the world has recognized that to produce the lithium which the world needs for this green energy transition, it needs lithium from every resource, especially from sustainable resources. We're seeing evaporation ponds are not sustainable. Hard rock mining is environmentally an issue. And DLE applied to brines, whether they are salars, geothermal, or oil field brines, has tremendous potential to produce sustainable lithium into the market. As this slide is again showing lots and lots of projects, all at different stages, using different technologies. You've got generally 3 different types of brines out there. There are the lithium salars, like we have in Chile and in Argentina. Then there are geothermal brines. There are very deep aquifers, such as in Germany, which Vulcan Energy are looking at, where the aquifers are thousands of meters deep and hot, very, very high TDS, and they're looking to recover lithium from that. Also in the United States and California, the Salton Sea, and also in Canada, they have geothermal projects. In United States, there's extensive oil field brines in Arkansas, the Smackover Basin, and again there are projects such as Standard Lithium looking at recovering lithium from those brines, all looking at different technologies. And this is all good. The more players they are developing technology for the industry, the more we can demonstrate that DLE is applicable to multiple types of brines and can deliver, as say, lithium in a sustainable way into the battery supply chain. It's good for every participant in this industry. Where we are at the moment, so we've done a tremendous amount of work with all those technology providers at laboratory scale. As again, Tommy said, we have a lab scale carousel. It is like this plant, but on a much smaller scale, where we've been testing resins. We're now going up to the next stage of a pilot plant, which is designed to produce eluate, which gets converted to make 1 ton a month of lithium carbonate. So this is a sun resin plant. These are 30 fixed columns. You can't see it, but in between those columns in the middle is a very large valve system. It's a multi-valve which switches the flows to all of these 30 different columns in different sequences. It's all electronically controlled. To see the scale between the blue columns and the green tanks on the right-hand side, you can see a few people there, so you can see the scale of this. Now, the purpose of the pilot plant is twofold. It is one, not only to demonstrate that the technology works, but it is to provide process design criteria for the pre-feasibility study. Now, we need the design criteria going into the engineering for the project. So a lot of that data we will get from this pilot plant work as it will have been running for a number of months before we complete the PFS. The second reason for having such a large pilot plant is to produce larger quantities of lithium carbonate for potential off-takers. When off-takers are looking to sign off-take agreements, they need to be sure that the material will meet their quality standards. Now, every battery manufacturer has slightly different criterion for their batteries. So although we say battery grade is greater than 99.5% lithium, it also depends on what is in that 0.5%, what the impurities are. So every cathode producer, battery producer will want to test the material to find out what the impurities are and whether they'll be suitable for the battery production process. And the way that they normally start is once they get interested in supply from you, you supply them with a few kilos. They do laboratory tests. to find out what the chemical composition. They will then want tens of kilos to start doing some physical characterization of the material, because they need to know the size of the grains of the lithium carbonate, the morphology, and all that sort of stuff. But then they'll want hundreds of kilos to test, to actually put into their battery production line. So this is why we're going to be producing so much material, because we expect to be in discussion before too long with a number of potential off-takers, and we'll have a very good position. They can see the pilot plant working. They'll be able to see where we've had the material converted. Here we're not producing lithium carbonate, we're producing the lithium chloride eluate, the pure eluate, which we then concentrate through reverse osmosis and then send that solution to North America, to Canada, where we have engaged or are engaging one of the companies there that already have the downstream conversion facilities to the concentration, the polishing, and the precipitation of battery-grade lithium carbonate.
And Steve, we made the point at the time, but I think it's also worth refreshing people in terms of the universe of impurities. One of the things that we'd always talked about when you and I go out and meet investors is the fact that our brine already is starting with a very low level of impurities.
Yeah, we have a low TDS brine. It's probably 140,000 ppm TDS. A lot of those geothermal brines could be at least double that. So they have a much higher impurity level.
For the rest of the shareholders, TDS?
Total dissolved solids.
Total dissolved solids. Okay.
Yeah. So all the impurity out of the 140,000 ppm of total dissolved solids, we're looking at about 200 ppm is lithium, and 139,800 is something else. So that's where the DLE is very important. It allows the lithium to be absorbed onto the resin and leaves more than 99% of all the other TDS stuff behind. So that the lower the TDS you have, you can generally get a much purer eluate, which you send for onward conversion.
But within that TDS, within the total dissolved solids, my understanding was that one of the other advantages we have is that we don't. There are various solids, some of which are difficult to work with, some of which are easier to work with, but we're low in what you tend to refer to as the nasties. Yeah.
There's a lot of discussion about the lithium potential in Bolivia, in the Salar de Uyuni, which is a very large area. Nothing's ever been produced there. One of the problems that they have is one of the impurities in the brine there is the magnesium is very, very high. Generally, you need a maximum ratio of magnesium to lithium somewhere not more than 6 to 10. Now, once you start to get, as they do in Bolivia, 15, 20 or more, it becomes very difficult to extract the lithium from the magnesium. So generally, we have a very good quality brine.
Thank you.
And the stage where we are, the plant is fully constructed. We've been going through our commissioning process, which we just about completed. We have the commissioning engineers from Sunresin, from Puritech, coming to site the first week in March to confirm that commissioning is complete and to start producing eluate from this plant, and producing eluate we expect during March to ship for conversion in Canada.
So what's that? Just over a week, 8 days.
Yeah, I think they're coming on the week beginning the 4th of March. Okay. Completion of commissioning.
Fantastic. And then we'll put out an announcement on that properly to the market when that happens. Steve, thank you. That was hopefully very informative for a lot of people. But I think the main There was one of the chat groups talking about some of the other guys that are out there and the size of resource. I think one of the things to go back to is when you look back at the scoping study and you look back at the net present value that we've got, we are working on the basis of 20,000 tons a year. So that would be on a 20-year development, looking at 400,000 tons. So 800,000 from 2 projects is what you want in your measured. Beyond that, you'd be getting quite significant. So there are various projects, and somebody was talking about one of the other peer groups being up there at 16 million, but they've only got about 40 parts per million in terms of their asset. And also the ability to scale that up and to be producing it all at one time, you just end up with a very, very long reserve life, which doesn't actually mean there. So our target is doing it 20,000 ton a year projects is what we're working on in all of our presentations and in the various studies. So from that, you can do the maths as to what we want as the core numbers, and anything beyond that is really just really great upside. And I'm having a very good chat with Gordon, the company CFO, earlier, that when you look at the net present value of the company, once you go beyond about 20 years and you're using an 8 or a 10% discount rate, the marginal extra value that you'll get given by any analyst in terms of the enterprise value of the company really drops away when you go out that far. But Steve, thank you. We have a bunch of questions. We've had a couple that have come in. I was going to group them into financials, the offtakes, the DFS, and 1 or 2 at the end. But we do have one that's just come in, which is relevant to the DLE, which I'd like to address to you now, if I may. So David M is asking, my understanding at this point is that CleanTech will be using sun resin for the equipment that operates at the center of the DLE process, but potentially a different resin supplier. Is that correct? Yes, it is. Steve addressed that a bit earlier. But the point I want to put to you, Steve, was how do you plan to achieve the polishing and purification steps? I see a partnership with Forward Water Tech, but Sun Resin seems to also engineer their own polishing flow sheets and equipment and seems very experienced. Please explain the approach that CleanTech is taking.
Yeah, we've taken the approach of not having all our eggs in one basket and be totally committed to a single company. We want to stay abreast of all technological developments. That's both in resin design and in plant design. So this is an example. Now, we've used an established provider, Sun Resin. We worked very, very well with them to provide the pilot plant. In testing the resins, we found that the Lanshan resin is today more suitable for our brine. That may not be the case in 2 years' time. When we want to have a major order for the full plant. So companies such as Sun Resin have recognized that there are competitors out there. We continue to work with them. They're developing new resins. They've developed new resins in the last few months. We're carrying out test work with them in China and at their facilities in Argentina. We want to do everything we can to assist the technology providers to produce better resins. And even when we build the full-scale plant, we won't necessarily be using the same resin all the time. Again, I go back to my days at Rossing Uranium. We started up the plant with one resin. I think it was from Dow Chemicals. Many other people were also producing resin. We continually tested resin, and as they were improved or they dropped in price, we would buy from Rohm and Haas or DuPont or anybody else. So we will stay agnostic. All we want to do is buy the best resin at a particular point in time at the best possible price. And as far as technology providers, we're exactly the same. We've been working with Sun Resin. We have engaged Worley to do the engineering work and lead our pre-feasibility study. And they've worked with many of these lithium projects in Chile at SQM, Albemarle. They understand the technology very, very well. And when we go out to bid for plant, we want to encourage numerous providers. So we know Sunresin can build plants. We know that our current provider of resin for the pilot plant, Lanshen, have established 3 demonstration plants in China. We see the very large, one of the largest private engineering companies, Koch, in the United States, are developing DLE plants, and they formed an exclusive agreement with Lanshen to supply resin for the Koch engineered plants. So this is where we are at the moment. We want to encourage more people to come into the industry to develop both the resins and the plant, so that we have the opportunity to look at what is the best price for our full-scale plant.
Excellent. Okay, well, let's rattle through. We've got a number of questions that came in. A lot of them were very, very similar. So I've sort of grouped them in, and I'm sorry if we don't address the exact question. But I got them around the financials, the PFS, the DFS, question about renewable energy grid, exploration projects beyond the main 2, and then there's some questions about offtakes, which has been very interesting. So some of these I can address very quickly, Steve, and the rest I'll address into you. But there's about 15, just so that people know. So we'll rattle through them as quickly as we can. On the financial side, we were asking about a question about monthly cash burn and cash runway. Can't really comment. Like a lot of exploration companies, we have areas of or periods of higher exploration during the drilling season. But what I can tell you is that we'll be putting out the financials in early to mid-April, and it will state everything there in terms of cash burn and how things were done. Current cash flow, again, we're not selling product at the moment. We're in the exploration phase, so we don't have cash flow as a company. Will the pilot plant generate any meaningful cash flow? Again, the same question. It's going to be there to giving product to potential partners, offtake partners, and battery manufacturers that we hope to then go into partnership with. So it's not being sold, it's being produced to then put out into the industry. So Steve, I'd like to hear something about conservative, realistic OSPEX estimations of the planned DLE process compared to spodumene.
Well, I think if anybody has a chance, there was a very good broker's report by Wilson's a couple of weeks ago, which gave the cost curve from all the producers, lowest cost up to highest cost, both brine and spodumene. And they clearly showed that the brine producers, including DLE, are at the bottom end of that cost curve. We are within that bottom quartile of costs. The spodumene were up at the top. And what they also commented on is where the lithium price is today. They said that the expectation is that 50% of the spodumene projects out there today would not get financed into production at today's price. Amongst the brine projects, only about 15% would struggle to get finance at today's price. So clearly, in a low price environment, it's better to be producing from brine, which is why we've put a lot of effort into making sure we have minimum operating costs. Again, I go back to my Rio Tinto days. I was taught as a very young engineer in the business, don't focus on the sales price, focus on your operating cost, because then in the good days, you're making very good profit, and in the bad days, you're making profit.
I actually, this is just actually the page here from the Wilson's report, which is very good. And again, Nick Baxter, who's the CleanTech's communications point, has a copy of this, and anybody wants to email directly, his email, I think, is on the website. Alternatively, if anybody would like a copy, please email me directly, and I'll be happy to send it back to you. But it's a very, very good report. Let me just stop sharing there for a second. Right, there is a question on the next funding, for example, is mentioned through the ASX listing in the past. Do you want me to just crack on that quickly, Steve?
Yeah, please.
Yeah. So as everyone knows, we were looking to head towards the ASX. There was a backlog at the end of the last year. The company is essentially ready. The problem is that with all listings, whether you go onto the London market or Australia, there is a window in which your financials need to be current. So with the delay last autumn, the financials then went stale. So we're just going through the audited financials at the moment. And then as soon as they're up and running, we can get onto the ASX. That is for the reasons that we put earlier. We just think we're going to get a better reception. It gives us more options as we go forward. And it was a request of our largest shareholder, Regal, in the last 2 rounds, as they believe that we'll get a higher valuation. The minimum we need to do is a couple of hundred investors at $2,000 Australian, so about £1,000 each, in order to meet the listing requirements. At this sort of prices, we're not looking to raise further funding in any meaningful amount beyond trying to get a distribution of Australian shareholders. If the market was to have the run up over the next couple of months that it did before, then I'm sure we would reevaluate our options. But we're funded through the current drilling campaign and into the PFS. And then company like all explorations will look later in the year at then the funding into the DFS, and then going into construction. Somebody was asking, do we need any more money to go commercial? It's about a $400 million to actually build the plants, of which we'd expect to get something between about 75 and 85% in debt, the combination of debt and offtake partner financing, and then there'll be an equity raise down that time, but that would be considerably down the line when you've done all of your engineering studies and your DFS and you have your offtake partner. So that will be updated probably in the next sort of, well, what I want to do is in about 2 weeks' time was to have a session with Steve just on exactly what goes into the PFS and the DFS. And then about 2 weeks after that, I was going to do a session with Gordon, and we'll talk about how you go from being an explorer into raising the project finance and the offtake finance, and how what the process is, and when we will be looking to do that in the journey between here and being a producing lithium company. Again, we'll look at the timing, what makes sense. Right, so there's a question on the financials. Steve, a couple of questions on PFS and DFS. There's a question, when can we get a rough estimate on the finalized version of the PFS?
Yeah, well, we've been working on the PFS, from last year, based on the technology we're using from Sunresin, and on the drilling results that we had from the last drilling campaign. When looking at the market for lithium, we see that there's been very rapid, some changes which we want to address, in the PFS. Everybody talks about different battery chemistries requiring lithium carbonate or lithium hydroxide. 1 year ago, everybody was saying you need to produce lithium hydroxide for the high power NMC, nickel manganese carbonate, cobalt batteries, which go into those vehicles with a high range, and high power, the Porsches and the big Teslas. There's been a growing recognition that there's been resistance, from a lot of consumers in Europe and the United States to the high cost of a lot of EVs compared to internal combustion engines. So there's been a much greater push to go for cheaper EVs. China, of course, is leading the charge, and the way they can get cheaper EV cars is by using a different battery, LFP, lithium iron phosphate, which uses lithium carbonate rather than the lithium hydroxide for the battery. So that's much cheaper. There's no nickel, there's no cobalt. It's cheaper, not as much power as the NMC, but you end up with a cheaper car for cities. And then there's a third stream that's only really been developing strongly in the last 6 months. It is the development of EVs, which are going to be using solid state batteries. And there's a lot of research going into solid state because they are intrinsically safer than lithium-ion batteries. They don't tend to have any thermal runaways. And they also have very, very good capacity. They charge fast, and they have long range. I think Toyota put out a press release about a month ago and saying they're going commercial with their solid-state battery, which will have a range of 1,500 kilometers and recharge fully within 10 minutes. So a real game changer. Now, they don't need lithium carbonate or lithium hydroxide. They use lithium chloride to make the anode of lithium metal. So the solid-state batteries require much more lithium than the lithium-ion batteries, but they need lithium chloride to go to lithium metal. So as part of our PFS, we're looking at the alternatives of making carbonate, hydroxide, and chloride. Now, what are the markets and the growing markets for these materials, and how that would affect our process? So we're looking at that. Similarly, in looking at the resource, we had a resource last year, which we declared. We've gone into a new drilling campaign this year, which is to do two things, both to increase the measured and indicated resource, but in particular to convert those into reserves. Now, for the PFS, you need to be able to establish what is the recoverable amount of lithium from the aquifer. You need to establish the reserves. To establish the reserves, you need to understand how the aquifer works. You need a very good modeling of the hydrogeology of the aquifer. You need to understand the porosity, the permeability of the aquifer, have conducted pumping tests to demonstrate how much you can pump out in the wells, and demonstrated that you can re-inject.
Steve, so I know it's casual, but I know we're planning to do one in about 2 weeks' time. I'm just cognizant we're well over an hour now and have a few questions there. In terms of an update, would it be fair to say, and I mean, we've discussed some of these conversations earlier, is that we're expecting to put an RNS out updating on the timeline for the PFS very shortly.
Yeah,
so
with all the reasons.
Yeah. And I didn't mean to cut you off per se, but I'm aware that we will be giving an update to the market on the timing for the PFS, and then our next scheduled one in 2 weeks' time is we're going to go into a little bit more deep dive of exactly what's in the PFS, what we're doing, and then how the PFS goes into then the DFS to help shareholders understand the process. There was another question that we did have from a shareholder about the DFS be analyzing, but again, if I may, we'll do that in 2 weeks' time. Quick one is, when do we expect initial drilling results, Steve?
We finished one well already. The results, samples are in the laboratory for testing for lithium and porosity. We're waiting for those results. The moment we get the results out, we'll put them out to the market. So no, we should only be weeks away from that. And we have a second well, which is going very well.
There's a question that we used to address in the early days, but we had a question here about power purchase agreement and how viable is it to connect to the power grid from LV's remote location and have conversations already started. But again, as I'm sure you'll allude, in terms of mining and distances, we're not remote at all. But Steve, I'll let you address that.
Yeah, when you say remote infrastructure, as I say, compared to Western Australia or Africa, this is not remote. No, we have an international highway going right past Laguna Verde. We have a substation from another mining company, which is 50 kilometers away. We are already engaged with the engineering from a consultant to look at where is the best point to tap into the existing power line, which goes from the main grid to other mining companies just to the north of us, and then what is the best route for the transmission line to the project. So that's underway. We're in discussion already with potential power purchase providers to provide renewable energy on a 24/7 basis. And all of that will be covered in the PFS.
Okay, and then last one quickly. What's your plan on the exploration for the new licenses around the Atacama Basin, and secondly for Yamara?
Yeah, we were very quick to acquire those license areas and really hold them in our pocket for the future. With the finance that we raised at the end of last year, we told the market we're really concentrating on getting Laguna Verde advanced as far as possible, getting the PFS complete, and getting into discussion with off-takers and strategic partners. So basically, the work on Francisco Basin, Atacama, and Yamara is parked, but they have tremendous potential into the future once we get Laguna Verde into post-PFS.
Okay, then on to the last ones that most people were interested in is around the offtake agreements. So how many offtake or potential offtake partners and JV partners are we currently having discussions with, and are they ongoing?
Yeah, we have non-disclosure agreements with a number of parties who potentially want material or potentially want to become a partner in the project. I think we have at least 5 already signed. I've made it very clear from many of these talks months ago that we are deliberately not seeking offtake agreements at this time. It's premature. The best time to seek offtake agreements is when the PFS is complete. We have a good understanding of the project, the economics of the project. We have the pilot plant up and running, demonstrating we're making battery-grade material, and then we become very attractive as a potential supplier, particularly when we can demonstrate we're supplying green, sustainable lithium into the market. And that is still the position. That is the best time, because those people who want the offtake, we want to see them fund the construction of the project, or a large part of the construction. And we need the PFS complete to get into substantive discussions, not just on offtake, but also on finance for the project. I've seen lots of junior lithium projects tout their non-binding offtake agreements as if that is important. All that is essentially doing is giving a free option to the offtaker. They get virtually nothing for it. We don't want to be in that position. When we start talking offtake agreements, it's from a strong position post-PFS.
Thank you. Now, I'm conscious that we were going to try and keep to an hour, and we're at a good 17 minutes over, and we may well lose a number of people. So we had a question regarding from Leo about sodium batteries. Leo, we're going to do one about the battery market and the demand for EV. So if I may, I'd like to roll that over to that. Ian H had asked us a question about the verification of our lithium resource. In 2 weeks' time, we're going to do one about the PFS, and we're going to outline about the resource and the drilling and how that moves into. Couple last ones on the offtake about who. So there are 5 parties under the NDA. One is a commodity trading, one's some battery manufacturers, some DLE specialists. That gives you a sense of who's down there. But we've had people not only under NDA but down on site. Some have received samples already. Some have been down at the projects having a looking. Some are waiting for further ones. The other bits we touched on about Landstead. The agreement would be signed. Steve just mentioned about the offtake agreement, and I think that's from where we are. But I didn't want us to run on to more than a sort of an hour and 15 max, Steve. I think when people then see the video, we'll get turned off for the rewatching. But thank you very much for your time. It was thank you for Tommy earlier. This is not necessary to do a sort of a financial and a redo of the presentation every 2 weeks. So we wanted to focus a little bit on the drilling. We wanted to focus on the politics. This was about DLE. In 2 weeks' time, we will do one about the PFS and the timelines and how that feeds in. 2 weeks after that, I'm hoping to do one with Gordon, where we're going to focusing about financing and when we would expect in the company's development to look at further equity and then further debt, and how you get into construction and how you actually build this out. We've had about 170 register, which is, I think our first one was 60 and then 80, then 100. So we're now to 170. So we appreciate the support for everybody. My email is available, I think, just at daniel@fox-davies.com. Please do email if you have any questions that you want to put in advance or that weren't addressed here during this presentation. I can also refer you back to Nick, who is CleanTech's point person for communications. The main thing that I wanted to get over to shareholders from these sessions is I get to spend a lot of time with Aldo and with Gordon and with Steve. And there are a number of key risks in any junior project. There is resource. Is it there? We have the resource. Do you have the grade? Yes, we have the grade, and it's low in impurities. You have financing risk. That is an issue with all junior companies, depending on the market and where we are in the commodity price. But then you've got management and an execution risk. And one of the things that I think when we do the short presentation is, without wanting to embarrass Steve, Steve is really, really good. I mean, Steve really understands what this process is, the product, the partners, what we need to be doing, and has a phenomenal amount of experience in bringing projects from grassroots into production. And one of the reasons I particularly wanted to do this one on DLE is to allow the shareholders to get a chance to sit with you, Steve, as their executive chairman, to not only understand DLE, but to get a sense of who is at the top driving the company and understanding the technical challenges that we face, and to help give assurances that we are fully at the point of, at the forefront of understanding what's going on. And because I get the time with you to explain it to me, and some of our shareholders maybe have varying levels of understanding. So I appreciate your time. I know it's late in Spain. It's about 11:15 here in Dubai. So we will catch up in due course. Everybody, thank you very much for your time, and we look forward to seeing everybody again in 2 weeks. Thank you very much.
Okay.
That's great. Steve, Daniel, thank you very much indeed for updating investors. Ladies and gentlemen, if I could ask you not just to close this session, as we'll automatically redirect you for the opportunity for you to provide your feedback in order the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team from CleanTech Lithium, Daniel and Steve, wish you all a very pleasant evening.
Okay, thanks, Mark.